Good morning, my name is Christopher Charlton. I'm here to present to you the Centre Asset Management Market Commentary for today, the 15th of April. There was an article recently in The Spectator by Robert Gore Langton concerning a new book just published based on the stories of the heroes of Telemark. You may recall the film starring Kirk Douglas. It is written by Amanda Mitchison, a well-known writer of children's books. Well, this is a book for 10 to 15-year-old boys, and here 4 young teenagers are parachuted into Norway in the Second World War with a mission to destroy a German heavy water plant. Apart from the exciting story, the book has a lot of interesting tips for young kids on how to survive in the wilderness, eating moss, sucking fat out of reindeer's eyes, resisting interrogation by the Gestapo, that sort of thing. Well, the book school's distributors have refused to distribute it. The publisher wants to eliminate any reference to death, and the libraries have decided that the pictures and diagrams are too grisly. Pictures such as how to skin a rabbit or frostbitten toes. As Mr. Gore Langton aptly describes it, it seems that British libraries have become books censoring crypto, vegan, state daycare centres run by people whose favourite word is inappropriate. Also, the publisher requested that a German soldier, here it's irrelevant whether it's German or British, be wounded, not killed, in the book. It seems that no one is allowed to die in children's fiction books nowadays, but they are allowed to in mass scale in films such as Lord of the Rings. As well, kids can murder, destroy and mutilate as many of the enemy as they wish in computer games, which they now play 4 to 5 hours a day. Signs of the times, I suppose. The main event of last week was, of course, the huge defeat of the British Labour Party over the introduction of a 10% rise in the tax on cider, a traditional drink based on fermented apples popular in the southwest of England and also in the northeast of France. The bill came into force on the 29th of March and will be reversed on the 30th of June unless Labour wins an outright majority. I think this may be the shortest bill in British history. Well, as you can imagine, celebrators were out in full force, as can be seen by the jubilant native dancing of local Morris dancers. There you go. For the uninitiated, Morris dancing is the nearest thing the Brits have to voodoo rituals and is popular among the rural community and the over 25-year-olds. On similarities, I was asked about the importance of correlations between asset classes this week. I touched on this in my monthly report last week, and here we can see the striking correlation between the dollar-yen and the yield on the US 10-year note. This chart goes back to August of last year. With correlations, the trick is to decide which asset is influencing the other. Well, in this case, we see joint reasons for the correlation to continue and both assets to rise. We expect US yields to ratchet higher over the coming months, targeting 5%. And we expect the dollar-yen to move above 100. In fact, the Japanese government this week announced that they would be happy with a US dollar rate of 120. Well, that's a long way away, but it's not inconceivable. The main issues of this week are the continuing Greek crisis, potential Chinese revaluation, and inflation picking up in Asia. We'll touch on Europe today. The Greek short-term auction went well, but the market remains sceptical of the future, even convinced that Greece will eventually fall apart. The problem is that this is now a medium-term issue, and we really won't know until we see whether the Greek government can implement the austerity measures expected of them, or whether they will be forced to use the loan facilities now in place. So the euro has found some traction and has bounced off the lows at 133.60. But with the current market scepticism, we doubt that these gains will be sustainable, and so we maintain our target of 130 for the euro against the dollar, although we believe that this move will be more influenced by intrinsic dollar strength than euro weakness. The pound has also found some support based on some encouraging reports on the economy, although the consumer confidence yesterday numbers were disappointing. Of course, we have the election looming, and we'll have to follow the infamous swingometer on who is in the lead. The latest numbers show the Conservatives with a 12-point lead. When we talk about the Greek budget deficit, which is running at around 13% of GDP, we should not forget that the UK budget deficit is also running close to 12%. The UK has one distinct advantage in that it can devalue, so any sterling strength would jeopardise the expected recovery. Therefore, we regard this period of strength to be short-lived and maintain our forecast of 140 for the pound against the dollar. The markets are also comparing the fiscal situations between UK and the Eurozone, but there is another factor. Over 60% of UK trade is done with the EU, primarily Germany. Germany has a large trade surplus and the UK has a large trade deficit. The solution is for the pound to move lower. So once the crisis over Europe dies down, which we believe it will, then the euro sterling should start to move higher again, and we maintain our target of 94 for euro sterling. That's it for this week. Wish you a good week. All the best. Bye bye.